Hello people, right, a long overdue video about 3-candle reversals and how for example, this 30-minute chart relates to the swings on a 5-minute chart. You know, there's loads of reversals here. This is one. There's one down here. There's one here. There's one here. There's one here. There's one here by the looks of it. Here and the lowest low. So let's just have a look at this one first. This is your close below the penultimate high. Low, high, high, low, high, high. It goes no higher, so the minute we break the low, we can start to do the song high, low, lower high, lower low, and close. And then if you drop to the 5-minute, you can just see the swing trade of these three candles here. I haven't done this before for a while, or in recent videos should I say. Let's highlight the candles that are involved in the whole move. See what this looks like. So there's your trend: high, low, lower high, lower low, and close. That's your new bar, the pullback, and then the continuation. That's the swing trend. We can get rid of that. It's high, low, lower high, lower low, and close. Then it comes back to test our support here, which has created this uptrend, to see whether it will hold as support and become resistance. And when you can do your 3-candle reversal on the lower time frame, and make sure you don't go out of alignment, because what you must not do is consider trading short with your initial reversal down if you are in a uptrend. And if we look at this now, you can see, I mean, this is an exceptionally deep reversal, so it's a bit of a bad example of a short trade, selling trade, but it is a good example to use in order to make sure you're aligned. So on this 5-minute chart, we have pulled back and reversed long with a 3-candle reversal. Now if you look at that, you will see that is a 1-minute trend: low, high, high, low, higher, high. So let's go down another time frame and look at that. That's our two vertical lines. Here's the uptrend: low, high, higher, low, higher, high. This is your M5 high. That's your close above it. That's your pullback. So now we're continuing to the long side because of that deep pullback against our potential down move. That's all we're trading, guys. Fractals. That is the difference between a 3-candle reversal to the upside on the 5-minute chart, a 3-candle reversal to the downside on a 30-minute chart. So if we go back to the 5-minute chart, what have we got to do now? We've got to make sure it hasn't reversed on a 15-minute chart, because it has reversed up on a 15-minute chart. We then need to make sure we've done a 3-candle reversal to the downside on a 15-minute chart. So here's the 15. Right, in this instance, the reversal level, let's get rid of these two now, is way up here. High, low, lower high, lower low. So if the 15-minute was going to continue to the long side, we would have to break that high. There are a few caveats to that, but at this point we won't go into that area. So hopefully you can understand now, because we haven't pulled back on the 15 minute, we don't have to come down on the 15 minute. So it means we can use our 5 minute to enter short. I hope that makes sense. What has happened here is this has pulled back and it's hit this clear support here, tested it as resistance. So it's just, all that's happened is it's just gone deeper. And that I was going to make a video about, actually, because that is what I call the swan song. Just when you're expecting to enter, always expect them to create an even higher high, but fail to close, as they did here, into that support. Okay, you just have to try it and apply logical thinking when you're think about supply and demand. Think about the fact that these are sellers that have failed, these wicks are sellers that have failed to overtake the market, and the buyers have moved back in again with a green candle. Try and think of supply and demand. These are buyers that have failed to overtake the sellers, and they've just turned into new sellers. That's what these wicks are telling us. Okay, so we can drop down to the 5 minute now. Oh, let's put our 30 minute on there again. That's the original downtrend and close. This is our pullback happening. So back to the 5 minute now. So technically, when that 5 minute candle is reversed against, in other words, the low, high, high, low, high, high, by a new downtrend and close, which happens to be the same level, is that a coincidence? I don't think so. They've broken through and closed through that what's significant, that's the right word, a significant 30 minute low support has failed to hold again, and we can once again look at the internals of that 5 minute trend, draw a new line on the low of that green candle, because that's the penultimate candle in this instance. We'll move this over just so we see where the uptrend is and the downtrend is in place again, and drop to the 1 minute and you can see the trend. High, low, lower high, lower low, lower high, lower low and close. That was the low of the 5 minute, or the close of the 5 minute candle. That was the open of the new candle. It's pushed on down a bit and then it's pulled back to test that 5 minute level from over here as resistance again. And on the 1 minute you can see clearly we've confirmed to the upside again, and then we've confirmed back down to the downside. These are inside bars. This is the safest low to consider the reversal, the close below that candle. And that's what I mean by exhaustion. They've exhausted all the buyers and then the price just crashes. So we've used a 30-minute reversal to the downside. We've studied the reversal to the upside, a test that we know happens. Then we've moved to the 5-minute chart. We're looking at the internals of that 5-minute reversal long, that then reversed back down. Pause and watch this again, guys, if you need to. Then we've watched the 1 minute pullback that actually confirmed to the upside here, with this the high of that red candle being broken by this green one. And then lo and behold, we've come down, we've confirmed to the downside on the break of this green line here on the 1 minute chart. Notice the M1 low, and then the price has just crashed. Okay, and that's where then you can bring in your learn these things, and then you can bring in your RSI histo, which will confirm your entries. And there's the bust and break there. That's the bust, there's the pullback, there's the break and close, right on our candle. In fact, it was just a candle before. But, you know, what can I say, really? That's how I added back the RSI histo into my trend analysis workings. So if we drop back to the 5 minute, you'll probably, I haven't cherry picked this, you'll probably see an RSI break and close that combines with the big moves down as well. Here's one, bust, pull back, break and close. There. This one, we're right on the bust, pull back, break and close, and there's price just collapses again. That's why the RSI is on the charts. So, you know, hopefully you can now see, you can also, I mean, also always remember that the trend count, to save confusion, is always the breakthrough, the level. So it doesn't matter whether you can count swing 1, 2, 3, 4, 5, 6, 7, swing 3, swing 1, 2, 3 will always be the breakthrough. So back to the 30-minute chart, think about this, guys. I don't mean to confuse you with science, as it were, but if you look at the candles, take the scroll off so you can see it properly. Swing 1, swing 2, swing 3, and that's the break of the low of that candle there. Now it doesn't matter how many candles you have in between here, you will always have, that will always confuse your swing count. But if you always say swing 3 is the break and close, and then you've got as many swings as it happens on the reversal, it doesn't matter. And that's what I mean about M5 being better, because they're quicker, because when you're in an M15 situation in terms of swings, which are an H1 stroke H4 candlestick reversal, they can send it sideways for a day, and that will drive you insane trying to catch the right time to enter. So that's why I suggest using the M30 and the H1 at the volatile times of day, because they are the quickest moves and you will see them work lots better, loads better. Apologies for my grammar. So I'll do this one in a moment, but this one should be food for thought today. And remember, I tweeted today about the exhaustion phase. You know, the buyers have been exhausted up here. We've had our reversal. We haven't had one in this whole move. And then the buyers, this is just a smaller version of this. The buyers have been exhausted again here. And then when you drop down to M1, the buyers get exhausted again. And all that is the institutions faking in buyers, dragging in those novice traders, retail traders possibly, or just complete idiots, into buying when we have had an inkling into what's happening by our reversal. You know, this is a statement of intent. A statement that the buyers have run out and the big institutions intend to potentially, possibly send it down. Much as this statement of intent, the final move down was broken by a bit of up move. We've got our special weapon, if you like, this 3 candle reversal. Then we can start to make sure it's not a fake to the upside by using the pullbacks and continuations on the lower time frames to capture this at the best possible opportunity, in my opinion. Some people will just keep selling the top and riding it, maybe from here, riding it, adding to it, adding to it, adding to it. I can't do that. It's not to say it's wrong. Same here, some people might have started buying at this level for whatever reason. Left hand side might have been support or a big round number, and they will keep adding to their buys as it goes down, with hopefully capturing that reversal. Great method, I can't do it. So thanks for watching, have a great day.